Hello and welcome to Moneycontrol. My name is Ashwin Mohan and you're watching a brand new edition of Deal Central, where we get you the top voices from the world of private equity, mergers and acquisitions, and equity capital market deals. On the show today is a very special guest, Ravi Lambah, Head Strategic Initiatives and Head India at Singapore headquartered global investment giant Temasek. Ravi, always a pleasure having you on the show.
Thank you.
Right, so I'll straight get into the big target that Temasek had outlined, and this was in 2023. It's a mega investment target for India, which you're very bullish on. And that was the fact that Temasek is looking to pump in around $10 billion over a 3-year time frame. We're in mid-2025. How close are we to achieving that target, Ravi? Let's start off with that.
Sure. I think we recognize that the opportunity set in India was increasing for our investments, and therefore we didn't set a target really. We said we are targeting to deploy anything $9 to $10 billion over the next 3 years. And last year, for example, Ashwin, we deployed more than $3 billion. And we had a similar outcome the first year from when we set that target. So 2023, 24, 25, last 2 years we've had that ability to deploy more than $3 billion. And we continue to be focused for this coming year as well. We are finding the opportunities. We are finding an excellent climate for us to deploy capital into India, which is favorably positioned with our themes of investment. And therefore, we will keep looking for great opportunities. And by the way, while this is the targeted amount, we will only do it if we find the right opportunities. And if we find opportunities to deploy more than $3 billion, we will even consider those, because we don't really allocate to geography or sector globally. We are very bottom-up driven.
Right. So your direct investments, especially in regions like India, I was going through your review, that has sort of contributed to the upliftment in your net portfolio value over the last 1 year. So if one were to look at the stats, Ravi, India now accounts for 8% of Temasek's massive portfolio, which is around $324 billion. How would you compare India to, say, other investment destinations like China, in which there's been a slide of sorts in terms of the Temasek share?
Yes, I think I think historically China was a large part of Temasek's portfolio. As Singapore grew, Temasek grew with Singapore, and as Singapore grew in China was the first few sort of places that really we increased our portfolio. And as China opportunity matured, we have been reinvesting proceeds from China into other markets like the US, Europe, and India. So I think it's really been a consequence of bottom-up opportunities that have presented themselves. Our portfolio value in India, you're right, I think that 8% is the correct number from a global perspective. But when we market to market, our portfolio exposure in India now is $50 billion this year. It was $37 billion on a like-for-like basis last year. And that growth in India has happened obviously because of the growth in the value of our portfolio, as you pointed out earlier, and the new investments that we put to work.
Likely to hit double digits soon in terms of the percentage allocation to India from 8%?
Again, we don't manage it that way. We are bottom-up driven. This is an outcome. This is not the way it's been planned, the percentages. But what's been planned is to deploy the capital for the right opportunities.
All right. What's the impact that you have seen from where you sit on your portfolio, the Indian portfolio specifically, when it comes to the entire evolving tariff regime, the trade tariff regime? It's constantly evolving with every passing day. Some of the trade tariffs have been announced, some are in the making. There's a lot of curiosity around the pharma sector, for instance, what the US government and the Trump regime will do. How are you ring-fencing Temaseks India portfolio companies from this entire phase of unpredictability, Ravi?
Yeah, that's a great question. I mean, the tariff deals are not done yet, but we would think that the peak tariffs are behind us. That was, which was being talked about Liberation Day around that time. So these deals will continue to get struck between the countries. From our perspective, we are very focused on our portfolio, and our portfolio in India, more specifically, is almost entirely focused on the domestic consumption, which tends to be less impacted by some of these global shocks and global tariffs especially. So we don't see much of an impact on what we own in India as this stage, and in fact globally I think that also holds true.
All right. Let's shift focus now, Ravi, to the most talked about deal that was struck by Temasek last year in India, and this is India's biggest private equity consumer transaction. You picked up a stake in top snack maker Haldiram for a valuation of around $10 billion. It was a hotly contested deal Other rival Ps were also in the race for this asset, but you guys finally sealed the deal. Give us a sense of the experience behind striking a deal with a family-run business like Haldiram.
It's not fair, Ashwin, for me to comment, as you know, on any particular transaction or investment that we've done. But I would step back and say that we continue to be focused on doing investments with families, and this is not a new thing for Temasek, especially in India. We many years ago, our Singapore Telecom and Temasek both did an investment with the Mittal family on Airtel. That continues to be a great investment. We still hold it. More than a decade ago, we did an investment with Godrej Consumer, with a family there when they were looking for capital. As you know, Manipal Hospitals is a family-owned business by a family. We invested with them. So this is thematically something we like to focus on. Because we find families and us have a lot of alignment in certain things that come together quite well. One is the fact that families are very long-term in their outlook, and we have long capital.
Right.
We are flexible. We don't have a fund life, so we can invest for the long term. Families are looking for value beyond just capital. We have a large portfolio that we own in India and outside, so we can bring learnings from there, whether it's processes, whether it's governance practices, and whether it's got to do with technology learning. So there are things that we can bring to the table in a dedicated way over a long period of time. That really helps us resonate, with families, and I think the families see that. And the Haldiram transaction was no different. We spent time with the family. We got to know them. We like what they've built. It's an amazing company, and we see it as a business that will compound for many years going forward. And we certainly want to be part of a growth of any business like that in India. So I think that really was the learning for us, that alignment is important upfront with families. And once you align, you realize that the journey will be a lot smoother, and that's how we are focused.
So going ahead, family-owned businesses in India, can we safely assume that will be a big part of the Temasek M&A strategy in other sectors as well, over and above the ones you've already bet on?
Yes, I think thematically nothing has changed. I think it's because we are able to build a long-term relationship, both in terms of capital and time, that we resonate well with families, because we don't have a fund life perspective.
True. Quick question, quick segue back to Haldiram. Are there any plans? Right now, it's a minority stake, but are there any plans going ahead of Temasek to further hike up its stake? And also, it's a fast-growing company. It's a market leader. Can we perhaps expect an IPO in the next 2 to 3 years when the time is ripe?
So 2 questions there. I think we are happy with what we own currently. There are other investors also who have come in, alongside when we made the investment, as you know, and we are comfortable with our position in Haldiram right now. And the IPO really is a consequence of a decision that the family and the board will take, and we'll be comfortable with that, because again, we view the IPO as just one event in a timeline of a company. It's not the most important event for us. We are really focused on long-term value creation.
Right. You mentioned Manipal Hospitals. That's also a big part of your India portfolio, and you hold a majority stake in Manipal Hospitals. Recently, they sealed the deal to buy out Ontario teachers-owned Sahyadri Hospitals. That, of course, bolsters your presence in the Western market as far as the hospital space is concerned. Give us a sense of the strategy over here in the hospital space. Manipal clearly seems to be the platform via which you will pursue inorganic growth. Can we expect Manipal to be on the prowl for more assets, or are we now looking at a complete pivot to that highly anticipated IPO?
I mean, the journey for expanding market share to the extent it makes sense will continue pre and post IPO. I don't think that IPO is a any determination of that. The IPO gives you incremental currency, so that makes a different lens on how you can do M&A. But I think if I backtrack, Ashwin, when we first did this investment, when we increased our stake in Manipal, you may recall we had a business called Shares in India, which then we folded Shares into Manipal, because we said now Manipal will be our platform, and which continues to be the case.
Medica Synergy also there.
Medica is also part of it, yes. And Sahyadri was a great fit. It's a great business that's been built. It's been owned by 2 private equity firms. There's a lot of alignment on the way the business has been sort of pulled together. And it completes, as you rightly pointed out, another part of our national footprint, which is the West. And we'll do more in the West as we find opportunities, because now we have the East quite well covered, South, there's a little bit in the North, and more in the West now. And ultimately, it's now 49 hospitals. There's 12,000 beds. It's becoming the scale has improved a lot since we invested 2 years ago. So Manipal's on a good track from that perspective. And the IPO will happen when the timing is right. Like I said, again, the IPO really to me is just one event in a timeline. We don't manage the business for an IPO. We manage the business for value creation. And the markets are there. The appetite is there. We will decide as a board and then take the company public.
Right, and when it happens, it could potentially be one of Asia's biggest healthcare IPOs,
right,
as and when the time is right.
Yes, that's probably right, because size is there. So yeah, and performance is good.
Right. Now let's shift focus to the renewable energy space. Moving on from acquisitions to divestments. Now Temasek and EQT, that was the co-investor, you announced the sale of your renewable energy platform, that's O2 Power, to the JSW Group. That was last year, around December. You have an ambitious 2030 goal to halve your current portfolio emissions. In that context, from a sustainability point of view, what kind of deal activity can we expect from Temasek in India in the renewable energy space and the sustainability segment?
We continue to look for opportunities in this space, and not just us, even our portfolio companies as well. So to us, it's business as usual. The divestment of the O2 Power business was really a consequence of a fund life with our partner. And we had always decided upfront when we invested that at the right time, when the fund needs to exit, we will exit with them. But we will look at more investments in this space. We like the fact that there's a lot. The renewable energy, the clean energy demand is pretty significant in India, as it is elsewhere in the world. We're on track for our targets, as you pointed out earlier. And in India specifically, we see opportunities both in many parts of renewable energy, and also the energy transition. So both of these we are focused on.
Right. Now, the startup space, that's also another segment that you've taken a fancy to. I see a common theme, consumer-led, technology-led, basically consumer tech, Rebel Foods, Lenskart, these are two classic examples. What about the other subsets of, the startup space in India? I'm talking about fintech, edtech, health tech, agri-tech, there are so many of them.
Yes.
What's your sense of those opportunities? And also, currently, what's your take on valuations in India as far as the startup space is concerned?
That's a good question. There are a lot of questions on that, actually. So stepping back, I think when in the mid part of the last decade, when money was quite cheap, rates were very low, growth was absolutely in favor, and all of us were investing in these high growth, early stage companies.
Right.
And even at that point in time, we took a portfolio approach to them and said we'll do several of these, and we will see the results of that portfolio as against looking at individual performance. And some did well, some did not do that well. Out of that whole strategy sprung companies like Zomato, Policy Bazaar that have matured, gone public, and some got stuck, some did not make it. But we look at that strategy as a success. Now fast forward today, rates are high, capital is not cheap, so we're more focused on the more mature aspect of growth, because that's where we think we can make a higher difference, and more importantly, because those companies are more mature, we can deploy more capital in one particular company. Whereas in the old days, in the early stage businesses, we had to do many to deploy capital. And as our portfolio is maturing, at $50 billion of portfolio value, we have limited bandwidth. So I think going forward, you will see us do lower number of investments with higher dollars, where we find the right conviction.
Check sizes will be bigger.
Yes. Yeah. If we have the conviction, we'll deploy more, and we'll double down on those over a period of time, like we have in some of the names you mentioned as well. And as they mature, we can hold them longer. So I see this as an evolution of our strategy, that we will still do very selectively some small investments, mostly out of our innovation and our early technology sort of practice. And our bulk of our business, which is minority growth, we will increase the check size and try and look for something that's a bit more mature.
Right. What about the listed space? In the listed space, you've taken a fancy to the financials. That's a sector where you have a lot of exposure. Axis Bank, SDFC Bank, Kotak Mahindra Bank. What are some of the other pockets of the Indian capital markets listed space where Temasek could perhaps look at fresh opportunities over and above FIG?
No, I think you're right. I mean, the banks were the early part of the bet because they were a good proxy of economic growth. They continue to be a good proxy. So, we still hold our stakes in the banks. Last year, we we invested in a Kotak Mahindra Bank for the same reason. We saw a good opportunity. Given the bank's trajectory, we added that to our portfolio. We've also, as you know, in the past invested in insurance, both life and general. We invested in HDFC Life Insurance, one where we put more capital last year. And as we look forward, we see the maturity of the capital markets taking us to newer opportunities like wealth management, asset management. And there also we're looking at putting capital to work. So this is just the evolution of the financial services investment sort of, playbook that we have. So we continue to hold the banks because they are the proxy. They are probably slightly low returns, but very stable, and they compound. Then it's the growing areas of insurance, where, again, as you know, the country, the penetration is still very low. It's still very early. So we are investing in that. And then the next tier, which is really the wealth and asset management firms, which are now beginning to get to a level where we think we can participate in their growth as well. So financial services is about a third of our portfolio in India. We'll continue to build that portfolio.
Right. Now, Ravi, AI, artificial intelligence, that's completely transformed the world. Many would say at a frightening pace. It's transformed my world, the world of media. It's transformed your world, I'm sure, the world of deals and private equity. What's the kind of impact that you see on AI as far as India is concerned? How is Temasek participating in that revolution? And I'm asking you this because just recently there was a blockbuster deal in this space where you had Capgemini, which acquired WNS purely for its AI capabilities for a whopping $3.3 billion. So in the context of that big deal, what's the Temasek strategy on AI in India?
Yeah, I mean, that's a very important part of our sort of thinking today. And who knows what changes AI will bring. But we do know change is happening. It's happening at two levels: disruption, and then there's value creation on both sides. Both sides. You got to worry about both, and you got to think about both. So we think in that way. We look at our current portfolio in India and say, where can this portfolio be disrupted by AI? And where it can be disrupted, what do we need to do to make sure we make it future-proof to the extent we can? Because AI change, as you rightly pointed out, is no longer being measured in days and in weeks and months. It's measured in days. So something that exists today, tomorrow can be disrupted, or tomorrow can be improved. So we're seeing a lot of that activity in our portfolio, Ashwin, today in India. We're not seeing it as much as the application level, or the at the research level or the deep tech level. We're not seeing that as yet in terms of an opportunity to deploy capital, but we are seeing globally we're seeing that for sure. Okay. So from a Temasek strategy perspective, we are deploying money across AI. We have an AI pod, on the west coast of the US near Los Angeles for the last 5-6 years now, which is being led primarily to build a capability set in AI. We are deploying capital through our emerging technologies team and our innovation team in AI opportunities. And India specifically, we are seeing AI development in companies like VFS has got a lot of AI capability for improving the processes. You talked about BPO, UST as a services business that we own a large stake in. That's also doing a lot of AI-led development, and that is creating the opportunity for us to put more capital.
Final question: top 3 sectors, and I want you to stick your neck out in terms of M&A focus in India, both fresh investments as well as potential divestments, or maybe even ECM.
That's almost everything. So healthcare, I think, continues to be important to us. Yes. Consumer continues to be important to us.
Healthcare and consumer.
And I would say consumer with consumer tech.
Consumer tech.
And then financial services.
All right. Healthcare, consumer tech, and financial services. Right. Yes. On that note, Ravi, let me thank you once again for taking out time and speaking to Moneycontrol. Always a pleasure catching up with you.
Thank you. Thanks for the time as well. Good to be here.
With that, it's a wrap on this edition of Deal Central on Moneycontrol. This is Ashwin Mohan signing off. Stay tuned to Moneycontrol for more news, views, and updates.